Let's go through this here on Volition's website real quick. Choose challenges. Building a team in South Florida. Okay. Capitalizing the plan to reach substantial scale with significant infrastructure investment. Okay. GameStop's invested in their infrastructure. There's a comparison there. Driving unit economics and working capital dynamics simultaneously. Maintaining a competitive advantage against Amazon. So that price match right there, that's a competitive advantage. And the shipping speed, also a competitive advantage they're trying to keep up with, and driving unit economics and working capital dynamics simultaneously. So GameStop needs to go ahead and turn that profit now, and that that is where now they can drive further unit economics, right? Where their overhead is what makes them not net profitable at the time, right? Because of their selling and general administrative costs. So if they continue to lower those, that's their overhead costs. And then if they can lower their per unit costs, like as they're selling things, like obviously there's various different units, there's collectibles, there's games, there's devices themselves, there's controllers. But what I'm saying here is ultimately the company continued to operate more and more efficiently, and that's through things like retail technology, such as like keeping up with the inventory, what sells better here, what sells better in this region and that region, right? Things like that. And that stuff isn't overnight, so that's going to build over time. And I think if GameStop has the right people working there and the right executives, which I believe they do, that stuff just starts to come into place over time and slowly show up in earnings reports. And seeing things like the Kentucky distribution center being closed, now that they got the other two fully up and running, that will definitely cut costs. They've had to cut some employees. That's a little bit unfortunate, right? You don't want to see anybody lose a job, but that will also lead to more future profits. So at the end of the day, we see the company kind of doing these four things, right? These four challenges that Chewy had, building a team, GameStop built a team, capitalizing on their plan with significant infrastructure investment. GameStop's done that with two distribution centers, a customer care center, closing the unprofitable stores, improving the retail technology. Now they're driving unit economics. They're working towards profitability, making sure their capital, if they're going to put it at work, it's going to be at work in a good way. They're going to have a strong balance sheet. And now they're building this competitive advantage against Amazon. Again, with the warehouses, the delivery speeds, things like that, the price matching. Ryan's perspective. You have some investors who you can only ask them to do certain things because they aren't really willing to do a lot of work and get their hands dirty. I could pick up the phone to call Larry almost 24/7. He was available on weekends. He became like a partner. He was my co-founder or one of the employees. I could ask him for anything. He didn't always know the answers, but he would figure out a way to get it done. We could have easily partnered with someone who would have been the wrong investor for a multitude of reasons. We got lucky. Pretty awesome to hear that those two guys are now together out here on GameStop.